Today we're taking a look at ASX listed company S2 Resources, ticker S2R, performing some technical analysis and making some predictions on where we can expect to see S2R go in the near future. Let's get into it. How's it going, guys? Ryan here and welcome back to another ASX stock analysis video. As I mentioned, we're taking a look at S2 Resources today, ASX ticker S2R, performing some technical analysis and making some predictions on where we can expect to see S2R go in the near future. But just briefly, S2R is a mining exploration company. They currently are focusing on trying to find some high-grade, large resource scale discoveries and aim to make a return, obviously, for their investors. Currently, they have a few nickel projects at the moment, so that seems to be their main focus. But if you like to look at more of this company, make sure you do check them out. But today, simply, we are going to be performing some analysis on the chart, making some predictions based on that, on where we can expect to see S2R go in the near future. But without any further ado, let's jump straight in. Welcome into the S2R chart, guys, and currently the price of S2R is sitting at 21.5 cents, and if we zoom out you can see that recently we have broken out of a bit of a downtrend. So the downtrend had formed itself from basically all the way up here in 2020 December. It was moving in a downwards direction, I suppose you'd call it, over here. I'm actually going to put the top end around about there, and you can see that all these touch points had occurred. That is basically where this little channel had formed itself. So that was a downtrending, I suppose, bit of a, I'd suggest more of a wedge than a channel, but all in all still looking pretty bearish until the other day. What we saw on the 1st of November, or sorry, the 29th of October, not the other day, quite a while ago actually, a breakout of that point. Then what we saw is a nice flag pattern. So we had a breakout occur, and then we've had a flag pattern which has been forming itself for an extended period of time. So you can see this flag pattern forming itself here. We'll put the top end there. You can see as well a base established itself down here. And more recently, in the past 3 trading days, we've seen a breakout of this flag pattern. And we've broken out consecutively, and these are 3 really nice looking candles. You don't see any of the wicks on either side of them. They are just really bullish. So currently we are sitting at today's high of 21.5 cents. It may continue to go up. One interesting thing to note though is the volume is not actually coming in as strongly as I would anticipate. Maybe it's being thrown out by the 29th of October. So if we zoom in a bit, you can see even with this little run that we're seeing at the moment, volume is decreasing, which is kind of strange. Now, one negative thing I've picked up immediately is that our 20-day moving average has crossed below our 50-day moving average, although it does appear that it is coming back up and coming back up quickly. Right now the 20-day moving average is sitting at 18.6 cents, whilst the 50-day is currently sitting at 18.9 cents. So all in all, they are about the same, but it looks like unfortunately that just did occur, and I'd suggest why we didn't break out immediately on either the 5th or the 6th of January, because there was that little bit of hesitation. But it's broken out now, and I'm expecting to see that 20-day moving average move up quite quickly and get above the 50-day moving average, of course, as well. Let's have a look at a few more indicators. RSI. Now, as you can see, it's obviously moving upwards. Whilst yes, the volume has been quite low, you can see all these days here are green days. So of course, buyers are significantly outweighing the sellers. So we've gone up basically from an RSI of 45.52 to where we are now at 65.71. Still got a bit of room prior to hitting the overbought region, but I'm expecting things to either, I suppose, go up just into the overbought region or start to tailor off a bit. Maybe we'll see a retest of this, I suppose, resistance point now acting as support for us, or even potentially the 50 or 20-day moving averages once they do come above this line. But that will remain to be seen. Let's have a quick look at the MACD as well. bring that one up there. As you can see, the MACD is actually just crossed, which is very, very bullish. And it crossed on the 5th of January, the same day, oddly enough, that the 20-day moving average crossed below the 50-day moving average. So they're two conflicting indicators, so that can make things quite confusing. But if you really want to understand the momentum, I'd suggest looking at the MACD over your moving averages on the actual chart itself. The MACD is showing the momentum of this stock, and the momentum at the moment is growing and it's green. So I'd be suggesting that we're going to continue to see new, I suppose, highs be hit over the next few months, and we are going to continue to see a nice little bit of an uptrend. Based on that, what is the target? Well, I'm going to say our target is going to be here at 22.5 cents. That is the very first target, and the reason that is the first target is due to the fact that we have had many, I suppose, touch points in the past few months up here trying to break through it. So of course that needs to be the first target for this stock to hit and then break above that point. So today's target for the video is 22.5 cents. That wraps up today's analysis on S2R, guys. I'd love to hear your thoughts down in the comments section below. If you did enjoy S2R analysis today, make sure you do leave a like as well and subscribe for more of this sort of content. I'll leave it there, guys. I hope you have an awesome day. I'll see you next time. Cheers.